Hello, welcome to the Grow Your Wealthy Mindset podcast, where it is all about helping amazing physicians just like you create a wealthy life free from burnout and with the financial security to practice medicine on your own terms. I'm your host, Dr. Elisa Zhang. Hello, and I hope you're having a great week. It's that time of year where people are starting to think about their taxes. If you're filing your taxes using software like TurboTax and you have children, you may see a prompt that refers to opening a Trump account. When that happens, you may be wondering whether or not you should open an account for your children. This episode is to help you decide whether or not it makes sense for you to open a Trump account. First, let's go into detail about what Trump accounts are and how they work. Trump accounts are tax-advantaged investment accounts created under the Working Families Tax Cut Act for U.S. children under age 18. They're a special kind of traditional IRA established for the benefit of a child. To be eligible, a child must be a U.S. citizen and have a valid Social Security number. The account is owned by the child, but a parent or legal guardian acts as the custodian until the child turns 18. These accounts officially launch on July 5th of 2026. You can open one by making an election on IRS Form 4547 when you file your 2025 taxes. If you don't do it when you're filing your taxes, there's supposed to be an online portal that will be available sometime this summer, at least according to the website, trumpaccounts.gov. Once you submit the form, the Treasury or its agent will contact you to activate the account through an authentication process and complete the initial setup. You don't need to make a contribution when you open the account. In fact, you actually can't contribute until July. On July 5th, 2026, or anytime after that date, you can deposit up to $5,000 for 2026, though you aren't required to make any contribution at all. The contribution is not tax deductible, which means it doesn't actually matter if it comes from you, a grandparent, or even a friend. While only a parent or legal guardian can open the account, any individual can contribute funds. Employers can also contribute up to $2,500 to Trump accounts, whether it's for their teenage employees or for their employees' children. Contribution from employers are tax deductible. Employers may also allow employees to make pre-tax contributions to their children's Trump accounts through a salary deduction program. States, qualified nonprofits, and philanthropists may contribute as well, but contributions must be made to, quote, members of a qualified class, end quote, which could mean all children born in a certain year or all children in a specific state. For example, Michael Dell has pledged to make $250 seed contributions to the first 25 million American children aged 10 and under who live in zip codes with median incomes below $150,000. This means that if you own your own business or private practice, your business can contribute $2,500 to your children's Trump accounts and take a tax deduction. Annual contribution limits will be adjusted for cost of living after 2027, similar to IRAs and other retirement accounts. Your children's funds will automatically be invested in American companies. According to the website, trumpaccounts.gov, quote, funds will be invested in a diversified portfolio of low-cost index funds designed to maximize long-term growth while minimizing risk, end quote. The website also talks about there being an app that lets your child see exactly what stocks they own and how they're performing. By law, Trump accounts may only be invested in broad U.S. equity index funds that track the overall U.S. stock market, cannot use leverage, and must charge no more than 0.1% in annual fees. What is not clear yet is which specific funds will be approved for use by the federal government. It's also not clear where the accounts will be held. Initially, they will be, quote, created and held with the Treasury's designated financial agent, end quote, according to a White House document. An agent is simply a financial institution chosen by the Treasury. Later, parents or guardians will be able to transfer the full balance of a Trump account to their preferred brokerage firm through a trustee-to-trustee rollover. In other words, if you open a Trump account for your child now, you'll likely be able to eventually roll the funds over to another brokerage firm of your choice. Although a Trump account is similar to a traditional IRA, it has special rules during the growth period. The growth period starts on the date the account is established and ends on December 31st of the year before your child turns 18. For example, a child born on February 5th, 2025 will turn 18 on February 5th, 2043. So the last day of the growth period for that child would be December 31st, 2042. During the growth period, the money is locked in the account and can only be invested in eligible investments. The only allowed distributions are qualified rollovers to another Trump account, qualified able rollovers at age 17, distributions of excess contributions, and distributions upon the death of the account beneficiary. Trump accounts have a separate contribution limit from other IRAs. This means that if your teenager works, they can contribute and even max out a Roth IRA while you can contribute to their Trump account. Once the child turns 18, or on January 1st of the year they turn 18, the account belongs to them. They can continue to keep the account, which acts like a traditional IRA. Withdrawals on earnings are taxed at ordinary income rates, while non-deductible contributions are not taxed again. Your child can withdraw funds immediately for any purpose. If the money is used for qualified expenses, like higher education or a first home purchase, then there's no penalty. If it's not used for a qualified expense, there is a 10% penalty on withdrawals before age 59 and a half. While the website trumpaccounts.gov mentions starting a business as a potential use without penalty, that is not currently an exception under traditional IRA rules. One important consideration is that the funds in a Trump account count as the child's asset, not a parental asset. For financial aid purposes, student-owned assets are assessed at up to 20%, while parent-owned assets are assessed at 5.64%. Roth IRAs owned by students are generally not counted unless money is withdrawn from the account, and 529 plans are considered parental assets. This means that if your child's ability to qualify for financial aid matters, this is something to take into account. Which brings us to the question, should you open a Trump account for your children? One reason it might make sense is the federal pilot program contribution of $1,000. To qualify, the child must be a U.S. citizen with a Social Security number and born between January 1st, 2025 and December 31st, 2028. That $1,000 does not count towards the annual $5,000 contribution limit. In addition, depending on where you live, your child may qualify for Michael Dell's $250 seed contribution for children 10 and under living in certain lower income zip codes. But from what I read, your zip code qualifies if the median income of that zip code is less than $150,000. While the city I live in has a median income over $200,000, the zip code I live in actually does have a median income that's much less than that and under that 150,000 number. So you may want to actually check to see if your zip code qualifies. If you want to start passing wealth to your children, Trump accounts are one way to do it. This assumes that you have enough wealth that your own retirement is secure, that you have sufficient insurance and or assets to cover your living expenses if you become unable to work, and that contributing to your child's account won't interfere with your financial goals. You also have to accept that your child will gain control of that account at age 18 and could spend the money however they want. Let's paint a best case scenario. You fund a Trump account for each of your children with the maximum contribution each year. That money is invested in low-cost index funds, and the market grows over time. Your child grows up to be responsible and goes to college, where they have a low income from things like summer jobs. Because they have a low income, they can now roll over their Trump account into a Roth IRA while in a lower income tax bracket, paying any conversion taxes with outside money. Over decades, this money can grow significantly. In order to see just how much it can grow, since I didn't want to rely on the numbers on the trumpaccounts.gov page, I did some rough calculations myself. These are the assumptions I used. The first is contributing $5,000 in 2026 and then contributing the max allowed, which is adjusted for inflation, for a total of 18 years. I used 3% for the growth of contributions due to inflation. My second assumption was an investment return of 10%, which is roughly the average non-inflation adjusted growth of the US stock market. After 18 years, the account will have a value somewhere around $275,000, of which $119,000 was contributions. Roll all that over to a Roth IRA and allow it to continue to grow at 10% each year. If it sits there for another 42 years, then that account could be valued at $15 million when your child is 60 years of age. Now, I will say $15 million sounds like a lot of money to make off of $119,000 in contributions, but that also includes 60 years of inflation. Since I use 3% inflation, $15 million in 60 years is like having $2.5 million today. Using the 4% rule, that's an income of around $100,000 a year in today's dollars. This shows that Trump accounts are most beneficial for wealthy families who can contribute every year and are not concerned with financial aid. While some physicians fall into this category, it is certainly not all physicians. Considering the length of our training, many physicians have children at some point during their training or soon after completion of training. With significant student loan debt and delaying contributions toward retirements during our training period, many physicians need to focus more on their personal finances rather than funding a Trump account for their children. That being said, if you are in a position where funding a Trump account for your children won't hurt your finances, and you can accept whatever your children may do with the account when they reach age 18, then Trump accounts can be a powerful tool for long-term wealth building and passing wealth to the next generation. So now that you've heard all these facts, what do you think? Are you going to open a Trump account for your children? Or is it a pass? I'd love to hear from you so I can learn more about my audience and who's listening to this podcast. You can reach me by emailing growyourwealthymindset@gmail.com. Have a wonderful week, and I hope doing your taxes doesn't cause too much headache. Thank you for being a listener of the Grow Your Wealthy Mindset podcast. If you enjoyed this episode, I would love it if you could share it with your friends and colleagues. And now for the disclaimer. I am not a certified financial planner, accountant, or attorney, and nothing I say should be construed as professional investment, tax, or legal advice. This show is primarily for your education and entertainment. I am a physician, but I'm probably not your physician. So if you need any medical advice, please contact your own physician. Thank you.